Hey guys, in this video, I'm going to talk about new stocks I'm adding to my buy list for September 2022. I've researched these stocks thoroughly amongst their peers and spent a few hours on digging into each one. So make sure you leave a like on the video because it helps me out and I'm trying to help you get stupid rich. Stock number one is Upstart. The ticker is UPST. Many subscribers and Discord members have asked me about this company. I pretty much avoided the stock aside from one profitable option play a few months back, but now it's too cheap to ignore. In March, it traded over $150 per share. And currently, the stock is trading for just $25. Now, Upstart is an AI lending platform that partners with banks and credit unions to provide consumer loans using non-traditional variables such as education and employment to predict credit worthiness. This company is disrupting a space that is full of dinosaurs. Traditional finance is ripe to be disrupted. When I worked for Goldman Sachs, I thought that it would be like Google. I was far from correct. It was more like 1990s Microsoft. At just $2 billion in market cap, UPST is still a small cap stock. That makes it a double-edged sword. From one perspective, it can be 10x in 10 years, but from another, all but a fraction of small cap stocks actually reach over $10 billion in market cap. Many have poor performance or, at best, hang around the $2 billion to $5 billion range. For Upstart, I like its industry because fintech is disrupting finance. Cheap money provided by the Fed, that's what Upstart needs. All that money printed is good for lending. I actually almost took a job in New York at a lending company when I graduated before I worked for IBM. Lending can be pretty lucrative. I took a look at salespeople's commissions and they weren't too bad. I mean, for New York, they were okay. If you don't know, Upstart also does refinancing. Basically, what that means is they take loans, right, for let's say 12%, and then they refinance it for 9%. And that loan could be like $200,000. For that, they have sales reps. And when I was interviewing at this company, I actually learned a lot about this industry. So basically, this is how it works. You have a bunch of leads and you get a bunch of people who have lots of debt. And as a salesperson, you just give them a call, you talk to them, you tell them that I can refinance your debt and make it cheaper for you. So let's say that the loan is for 12%, I'll refinance it for 9%. That 3% on $200,000 is actually about $6,000 per year in savings for the first year, and then it does drop off after that. However, the salesperson basically gets the first like 6 to 12 months. So 6 months would be $3,000. So each sale is worth $3,000. So it is a really lucrative industry, not just for the salespeople working within these companies, but for UPST and any other lending company. Given this, I think that UPST can actually reach a $4 billion valuation because there's a lot of debt out there and people want to refinance their debt. And that's going to keep happening throughout history, right? That's not going to change. Everyone wants to pay less interest on their loans. And in 12 months, I really do see the stock going up. And in September, I can see the stock going up because it's been sold off to levels that honestly just don't really make any sense. Now, the next stock that I want to talk about is Google. I was looking at the 13F filings where you can basically see the activity of hedge funds and billionaire activity, right? You can actually see what they're buying and what they're selling. Stephen Mandel of Lone Pine Capital started nearly a 3.44 million share position during the second quarter, along with this other investor who's famous. His name is Chase Coleman of Tiger Global. Another famous investor, Ken Fisher of Fisher Asset Management, and John Overdeck and David Siegel of Two Sigma Investments. So biggest hedge funds ever in the entire world with the most famous hedge fund managers. These guys pull in more money than they can even spend on guacamole. They could take a bunch of avocados and stack it to be a skyscraper. That's how much money these guys have. They are billionaires. Some of them are making like $900 million a year or something insane like that. And, you know, obviously biggest investors, if they are buying the stock hand over fist, this raises some green flags for me. It does bring this into my attention at that point. It's clear to me Google dominates in internet search. They have a competitive advantage that isn't going away anytime soon. YouTube has grown into the second most visited social media site in the world. You're watching a YouTube video right now. I wish I can buy YouTube stock. Like, don't you wish you can buy YouTube stock as well? Let me know in the comments. Like, I would totally buy more shares or some shares in YouTube because I'm a really big bull of this platform. I mean, where else can you watch high quality content, learn something about education or really anything, entertainment, what have you, for basically free? It doesn't cost you anything except for an ad here and there. And I think YouTube stock is going to directly benefit Google because as YouTube grows, well, Google's going to grow with it. Google trades for a very reasonable 20 price to earnings ratio. For a growth stock, it's cheap. This is a growth stock and it's trading for the same as the S&P 500, like all the other stocks like banks and industrials and materials. Google? Why is Google trading for the same price as, like manufacturing companies? Doesn't make any sense to me. I feel like Google has so much potential, and not just in their revenues and their profits, but in the price to earnings ratio becoming more. So in my opinion, this stock has at least like 30 or 40% upside. Maybe not in September, but in September, I can see the stock doing really, really well. And on a long-term basis, I can see the stock having growth for the next decade. The next stock is SoFi. Now, this one, I want you to be very, very careful with. There's a lot of positives, but there's also some warning signs with this stock. They're also in lending, technology platform, and financial services. With over 4.3 million members, that's a lot of members, using 6.5 million of its financial products, diversified fintech SoFi is becoming a really big force in the financial industry, and they're also disrupting the fintech industry. The business is growing fast. The stock, however, is down nearly 50% in 6 months. So things don't really add up. It's just going in an opposite direction, and it's very volatile. But having a little bit in your portfolio isn't a bad idea. Since the stock is so cheap, it also makes it much easier to sell put options. Now, when I'm selling put options, it's actually pretty easy. So typically a put bets on a stock going down. So for example, say SoFi's at $6 and you sell the $5 put. When you sell the $5 put, you might get paid, let's say 50 cents, right? Or $50. Now, if the stock goes to $5, you're forced to buy it. Now, it's not nice to be forced to buy something. However, it's not that bad if you like the stock at $5 anyways. So for me, selling put options on SoFi makes a lot of sense. The next stock I want to talk about is Adobe. Adobe is my very favorite stock, and not because I like the stock so much, it's because I can't stop paying them. I have to keep paying Adobe myself because I'm a creator, right? I'm making YouTube videos, and every single person on YouTube pretty much uses Adobe. Anyone who's a creator pretty much has to use Adobe because they have a monopoly of all the best creative software for creators, for making thumbnails, for editing your videos. Adobe has that suite, and once you sign up, you cannot leave. So when I signed up, I think this was like 2 years ago, I've never really stopped paying my monthly subscription to Adobe, and if I get rid of it, well, I can't even make this video right here for you. Isn't that a fantastic business that you should own for a very long time? Adobe is an American multinational computer software company that provides creative cloud services and specializes in digital media and marketing solutions. Adobe is a diversified company which delivers 92% of its revenue from subscription products. Subscriptions are very stable sources of revenue and typically very high margin. That's the perfect formula. High value, high margin, and that's how the stock is going to do well into the future. Plus, the creator economy as a whole is growing a lot. So a lot of people are investing in clean energy, electric vehicles, into big data, into artificial intelligence. But there's also other fields that might not be as advanced. They might not be all technological, but the creator economy is growing a lot. Just look at TikTok. There's so many people jumping on TikTok. The platform has pretty much 4 billion people on it. There's Snapchat, there's Instagram, there's Pinterest, there's LinkedIn. There's so many creators out there. And there's a new creator coming out pretty much every single day. And these type of people are going to use Adobe. So not only small businesses use Adobe, but big businesses do. And individual people do because they use things like Photoshop. Now, the last stock that I want to talk about is going to be Tesla. Tesla has been a stock that I've been in for a very long time. I did make a mistake by selling it. However, now I'm interested in the stock again as it continues to fall down. And that's because I'm a really long-term investor. I don't really care about what happens in the short term. I've gotten some comments like, oh my gosh, you pushed NIO at this and this price. Well, I've actually been buying NIO at many different prices, and my average cost is still about $20 per share, even after buying it for like $4 per share, $30 per share, $4 per share, $10 per share, right? I bought it at so many different prices, and the same applies for Tesla. That's because I'm a long-term bull on the electric vehicle industry, and Tesla and NIO are my favorite stocks. So for me, I'm jumping back into Tesla stock. I'm selling put options to get in at a cheaper price, as I mentioned earlier, and I'm planning to hold the company into the future because I do believe in Elon Musk. I want to be behind one of the biggest geniuses of our era, of this whole century, right? And last century pretty much too. So I really want to be behind a company that's going to be changing the world, and I have a lot of belief in the company. So that's why Tesla is going to be my next pick for September. Now, if you want to follow all my trades, then you can check out the Discord community in the link below. You can book a free call. During that free call, you just get to understand exactly what I offer: my trades, my live coaching, access to private videos, how the Discord community looks like. You actually get to talk to someone on my team. Now, I do get a lot of these calls, so I only jump on about 10 to 20% of these calls myself, but it doesn't really matter because I trust my team, and I trust that if you want results, that you'll also have a good time in my Discord community. So make sure to hit that link in the description. Also sign up for my email list where I send you 3 emails a week, totally free, about option trading, about my life, about how to make more money, about how to be stronger financially, and I will catch you in the next video.